What up, y'all? It's the Kristopher. It's KW Podcast, KW speaking. Just want to thank everyone for your viewership. And yes, my advice, or signals, I should say, have been sound, my friends. Check it out. Gotta brag a little bit. So, if you look at the count here, it's we're reaching about 100% year to date return. Because year to date, it was at about 800. I'm going to hook up the MyFX count so we can get the actual numbers. You can track along with me. But if you've been watching any of the posts I'm making, you'll see that I've been posting, and I'm talking about on the individual posts, not the shorts or the long form videos, but the individual posts that I've been posting some of my trade signals. You can't call it advice when you're advisors, but it's a signal, meaning that you could just see it as a idea to trade on, but you have to make your own decision on that. Yeah. Anyways, get that disclosure stuff out of the way here. Anyways, if you're all new to this program, this is the Kristopher KW Podcast. KW speaking here. I'm the principal, founder, the practitioner, the advisor of the advisor, the commodity trader, the Forex manager, the insurance advisor, the estate planner, the tax coordinator, the legal coordinator, the estate planning doctrine, the KW, the witness, the wit, the kinetic Chris, KW. I'm in the house, baby. Anyways, check this out. Now let's get the download. A lot has gone on since last time I posted. It's been about a week or so since I've done a video. That's because you gotta let the cake bake in the oven. You got to let the trades mature. So I didn't want to come back until they had already done something, and yeah. But now we got to decide whether or not we want to take those gains that we're sitting on. Nice gains, right? I mean, look at this. We got some Japan data that should affect what's going on. Just listen to this for a second.
This is an acceleration from 1.4% in the previous month. Interestingly, take out energy as well, and you have core inflation
Interestingly,
growth of 1.7%, which is a deceleration from the previous month. So it gives you an idea that we are seeing the higher oil prices lifting that.
Yeah, well, we already knew that. Okay. You see my little tea cup here? This is a classic cup and handle chart pattern. And so originally it was up here, but then I moved it down here, and we had this drop after the Iran escalated. We had a peace deal memo of understanding, and then that fell apart and brought it down here. And then the market said, you know what? Things are working out. We got oil coming from different areas, and boom, it's come back. And at the end of the day, this matter is pretty much a foregone conclusion. Okay, move on. But yeah, you're seeing some of these trades here. This is the one I just got into. It's rather large at the top. I might just get out of that. So we got to figure out if we're going to get out or not, because it's at a point. If you take a look at here from a technical standpoint, this is a daily chart. Each of these candlesticks represents one day. So we look at down here, we're looking at September, August, July, June, May. Okay. I'm trying to get this thing takes a second for it to update, and these lines probably make it all scribbly. You can't see shit. Yeah. It's taking forever. I'm trying to make a point here. See if I can get the yen on here, but that's not. We're looking at this is the Aussie yen, and why do we use the Aussie yen? We use the Aussie yen because it's a proxy for the overall market. Okay, there we go. Thank you. Okay, so we look at this chart here on the long run. Let me just zoom in. Okay. This thing is not cooperating with me. Come on, mofo. Okay. Well, that thing figures it out. Um, the point I'm trying to make here is that there, every time we come up to this level, if it was straighten out for me, thank you. Híjole. That's what we say here in San Antonio. We say híjole. Spanish for like, what the fuck? Or otra vez. It's like, again? It's like, the chart again is taking forever. Okay, so you can see, uh, you come out here and they just zoom out, make us a weekly chart. We're zooming out, even bigger picture here. I'm gonna turn this to auto and we're gonna open it up. It might take a minute. Oh, actually did it quick this time. Okay, guys. Now, this is a monthly chart. Each candlestick is a month. So this is 2024. Here's 2025. From 2024, we had to ramp up like this, like we saw here, right? And then an epic drop. And that was when the Bank of Japan came in and intervened. Boom. So we have another run up here. So we could have another epic drop like that. Okay. But look at the anatomy of this. It was up and then boom. Here is more like a plateau. We're in a range. This is range bound. Okay. So you can see I've made the range here. You see these lines? That's pretty much the range we're in. So here, I'm going to get all these damn drawings off. This is getting in the way. Remove all drawing tools. Boop. Bye-bye. There. Haha. Now you can see. I wish I could have left those uh, ranges. And we need a daily chart here. This is two. So you got to get it. It's like zooming in on a camera and zooming out. The aspect ratio is changes, and you don't want to distort it to where it's unmeasurable. Then you're just defeating the whole point. Okay, yeah, that's the range I'm looking for here. Okay, I'm going to zoom out here so I can get the range better. Right here's the top, right here. Okay. Let's add another one. This range is here. I would say here. Because we might have a range in the middle, but okay. Now I'm going to emphasize more here. Okay, so we got a point here of resistance. We got a point here of support. Okay, we got support here. We got resistance here, 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 and lo and behold, here again. But look, it hasn't gotten up to this point yet. So let's zoom into this here. Okay, so we may have a little bit more before it hits that resistance that we've seen it hit. You can see it came up to here already. Here came to here, and here came to here, and here came to here. So 3 other times it's hit this resistance point. So we're going to call this resistance zone like here. So between these two lines this is the major area of resistance right here between these lines. So if it breaks out from here, that's a breakout trade. That's called a breakout trade. Sometimes you get a fake breakout and then it reverses. But as you can see, it's been under pressure for quite some time. Okay, so we go back here. Past doesn't guarantee future performance, but if you just past doesn't guarantee future performance, but for last year, for the over the last year, it's been bouncing off of this area. So sometimes it bangs against the wall, and the wall is too strong, and it bounces back. But sometimes it bangs a couple times, and then it breaks through, and this explosive breakout. And that's why you see I have such a large position I just got into uh, in my trade. So you see here, look at the unit size, though, and then it doesn't show the date on here. These are listed from newest to oldest. These trades. Um, Say if we do it by pips, that will tell us the newest and oldest. So the newest ones are going to have the lowest pips because when I got in, it can't pull back about 30 pips. The oldest trade is my 69 trade. That's I always do 69. That's my little scout trade. That's a very small trade. You see, it's sitting on a nice 265 pips. Pips is the basic unit of profit, and so it doesn't matter what size your position is. The pips is your measure of performance. A 60 pip move is a nice move for a trade. So 260 is a grand slam move. That's like you just kick some butt. Okay, to put things in perspective, y'all. But that's where we originally got in. So that gives me a point of reference to measure how we're doing. Now, going back to the chart. So we're looking for a breakout trade, y'all. Breakout trade. Break. Break. Out. That looks ugly. Break. Out. Trade. There. Say that. Okay. Now, that's your cup and T handle pattern. So the cup and handle. Here's the cup, and then here's the handle, right? And there's the coffee in there. Okay. So that chart is going to look like the price action is going to come down, it's going to come up, bounce around in the small range, and then break up. As you can see here, I'm going to have to change the color on this. I'm going to change it to blue. Okay. So here's the top of the cup. Here's the bottom. Here's the handle. And here's the break. As long as the Bank of Japan doesn't intervene. Keep that in mind, folks. Keep it in mind. That's why this is when, like, for the last week or so, I haven't been watching it much because you don't want the noise to distract you. But now that things has come up to that resistance point, now you need to be watching that constantly. Have it on your phone with an alert. And so Aussie Japan can be a proxy for TQQQ, which is NASDAQ. It could be a proxy for BABA, BABA, which is Alibaba. It could be a proxy for CWEB, CWEB, which is the Golden Dragon Index. TNA, which is the Russell 2000 triple leverage. MSTR, which is the MicroStrategy for Bitcoin, and Riot RIOT is another one for Bitcoin. You might want to try ETH also for Ether, because Ether usually follows Bitcoin. So once Bitcoin makes a move, you rebalance your position into Ether. So the Ether usually is a laggard to Bitcoin. So Bitcoin makes a 20% move, and then about a day or two later, Ether will make the same move. Ether will move. Bitcoin will front run Ether by a day. Point. All right, now let's hear what's going on Bloomberg. The market opens in 13 minutes, y'all. Let's see how things are cooking. Let's get a close-up chart in here real fast though, on the 5 minute. You see here on the futures. Well, I checked, they were green because nothing really bad came out today. I mean, we had some rough news. We had a little bit of sell-off, but nothing like it wasn't. Get out of town. It wasn't nothing big. Let's go look at 5 day. So here's 5 days. Ramped up, and now it had a little bit of pullback, but it's set support right now. What should we expect? Okay.
Right now, there's this monitoring list of 10 nations and their currency policies.
Hey, what happened? There it is. Come on.
There is growing sentiment that something has to be done to address the fact that China might be limiting gains in the renminbi to help spur its exports. We all know that China has been leaning on exports and its competitiveness, price competitiveness overseas at a time of domestic economic sluggishness.
What about other trading partners with China? Are we seeing any kind of cohesion when it comes to an attitude towards the yuan policies and practices?
Yeah, well, I think right now, obviously, the world is flummoxed by trade tensions, no doubt. And if a big exporting nation like Germany, for one, sees some weakness, and I mentioned Friedrich Merz, he more recently has called out, highlighting called for efforts to address the cheap yuan. And that really marks a significant shift in the German leadership. We also had the IMF and other bodies indicate that there is indications that the yuan is potentially undervalued. But again, I might also want to focus, your conversation just now on the Japanese yen. U.S. Treasury did kind of put the crosshairs on the Japanese yen. There's different factors obviously going on there with the yen up to nearly 164 to the U.S. dollar. But again, Treasury
it's made
says
quite a run.
Years of declines, obviously, as we can see a 5-year chart here.
That's why I'm saying we're going to have an explosive breakout.
Have resulted in substantial yen undervaluation. I guess you could say that's an understatement. Adding that excessive volatility to yen is undesirable. So I don't think there's as much pressure right now on that weak yen as it is on the perceived weak yuan in China. But again, Treasury clearly keeping an eye on that weakening yen.
Punch.
Our Chief North Asia correspondent Stephen Engel there. And of course, we're also watching the Korean won, which at least for today is trading at the highest levels in about 10 weeks. We're getting now the latest from the South Korean government that they will continue their close communication with the U.S. Treasury when it comes to their currency. Do also watch for the Aussie dollar as well. We have kept an eye on the Aussie given the latest tariff threats from the United States. We are now hearing from Australia's trade minister saying that the U.S. tariffs should be removed, that the new U.S. tariffs are unjustified, inconsistent with the U.S.-Australia FTA. Remember, President Trump is now rebuilding his global tariff wall using a new legal path and will begin collecting import duties of at least 10% on imports from major trading partners such as Australia starting Friday. Heidi.
Well, Cambodian Prime Minister Morn'n is promising to do more to tackle transnational online scam networks. He spoke exclusively with Bloomberg's April Hong, who joins us now from Phnom Penh. So clearly sizable risks for these emerging economies as well, right? What did you guys talk about?
Yeah, I spoke exclusively with the Cambodian Prime Minister in his first international TV interview, and you're right, this is coming at a time where the country's energy and tariff challenges are being compounded by the border conflict with Thailand, at a time where Cambodia is trying to show the world that it's serious about cracking down on scams. Both the US and China have put it under immense pressure to act, with the US
about
and
time.
2 Cambodian senators.
It's like ridiculous.
This week, the FBI Director Kash Patel was in Cambodia. Now, the Cambodian Prime Minister pledged to ramp things up, but also warned that these criminal networks are evolving, and that requires greater international coordination. Take a listen.
These are the cooperation to tackle common issues, go well beyond geopolitics. This is for the interest of all countries. Criminal network can attack countries that they don't have alignment with political. Anything they can exploit, they exploit. They can attack both U.S. and China at the same time for the benefit of money from scam operation or drug operation. So I see all this cooperation doesn't have to be confined within or be a hostage to an area of what we call geopolitics. Sometimes it's too overblown when we focus on the negativities. But overall, the positive relationship between even the main, China and the US
Overall, big picture.
existed for a long and multiple channel.
You talk about how these criminal groups are becoming more sophisticated. A UN report shows that now they're even acting like corporates, that they're using, for example, in the Southeast Asian region, some of these criminal groups, concessions within special economic zones to operate. And Cambodia has dozens of such zones.
Scam network
What is
become
Cambodia
problem.
doing to ensure that such zones
US get wise
not
now
being
that they
used
got
to
new
facilitate
administration.
criminal activity?
Yes, we have learned from experience from other countries. We have I give strict instruction to our security agencies, work with local government, working with agencies in charge of the SEZ to make sure that no SEZ has been used. If any SEZ is found to be covering for criminal scam, they will be liable just to the law, just like any others.
They'd be liable.
So far, we don't have any evidence on those. We're very careful on
So
this
far,
matter.
we have evidence.
So a lot of SEZ in Cambodia
But American
is
no
a
longer
platform,
stupid.
and
They have Cash Patel.
area for attract of foreign direct investment
Patel.
in multiple sectors. So these
Look at
are
the
areas that
operation,
keep growing, and we
the criminal
continue
operation.
to hope to attract more investment and expansion of the
Now we get more
business, both in
investment
the
with
SEZ
US.
and outside the
That
SEZ.
they
We
can
will
trust our
be
network
committed,
from
and we are
criminal
committed
invasion.
to continue to crack down on this. And we've seen, we have seen the result. We will make Cambodia become an area that not easy or worth to stay for scam online. This is
scam
our
online.
commitment, and we will continue to do so.
Okay, sorry.
No, it's not just about the scam crackdown. Later today, I'll be speaking with the Deputy Prime
We need to
Minister
get those
who's been leading
bastards.
tariff negotiations for the country. Cambodia has been hit with 10% forced
I got some
labor
Japanese
301
rap for you.
tariffs. That is on the lower end of the range, but the outcome of the excess capacity investigation of the 301 tariffs, that is still pending. So we'll ask how he has been engaging with the U.S. at the time when the U.S. president is seeking to maintain his tariff wall. Also
check.
speaking to the energy minister at the time
check.
of Brent is
Check,
topping
check.
$100 a barrel.
Check.
Bloomberg's April Hong there joining us
Listen up,
live from
listen
Phnom
up.
Penh. We have more ahead on the Asia trade. This is
Listen up. Listen up. It's the K-Dub, it's the K-What, listen up. It's the kinetic Chris. It's the K-Dub. I never miss. listen up, listen up, listen up. It's a K-Dub, listen up, listen up. Kinetic Chris, I never miss. I got the FX control, I never miss. The in, it's going up like this. The Kinetic Chris, I never miss. Okay, enough of that for now. I'm doing a little bit of a victory lap here, guys. After my trades being up so much, and I totally called it. And I don't mean to be braggadocious because I'll tell you what, y'all, the market will humble you in a New York second, and that's faster than fast. That's faster than a fat man who sat down too fast, and that's pretty damn fast. Just saying. So every day you gotta thank God for your blessings, whoever your God may be. Thank that God and humble yourself. Okay, because that 100% gain could get wiped out like that. Okay. The number one rule to trading is to humble oneself in the eyes of your God. If you don't have a God, then just humble yourself in general, okay, y'all? Just be humble and you will do good. Rule number one, humble. Rule number two, consistency. Rule number three, watch my videos. And don't forget to like and subscribe, all right? And never too busy for referrals. Hit that share button. You know what to do. All right. I think this puppy's opening up in 4 minutes and 9 seconds.
It's Bloomberg.
This is Bloomberg. Yeah. Yo. Yo. Yo, 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 yo. Yo, yo, yo. What up, yo? Kinetic Chris. Yo, dip. By the dip. Don't you trip by the dip. I tell you by the dip. You got a signal on AUDJPY. That means you buy the dip. By the dip. That means you go long. And watch your position for risk management. Alright, the market opens up. Good morning, good morning. It's Friday. This is the morning call, by the way. The Connect Chris, watch how I behave with my trade. Oh, nice close on that one.
And some of these programs were supported by funding like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US, and we think that.
Well, I'm glad they value our support because a lot of countries take it for granted, you know? Well, anyways, well, the market just came online, okay? As you see here in Beijing, I don't know if you can see this on your screen, it's kind of small, but it's 8 a.m. in Beijing, China right now. 1 a.m. in London, and it is 7:01 p.m. local time here in San Antonio, Texas. 210 Gringo in the house. Coming through your speakers. All right, this should be coming on now. It's got a little bit of lag here. You see the lag is about 1 minute because they would have come on. They're going to come on. It's going to be like 30 seconds on the clock probably. But as you can see, it's the next day in Beijing, China. And so the market literally starts now for Friday. So in the market in our world right now, it's Friday morning. Okay, y'all? You got to remember, we're on a chrono, I call it the chrono fusion, the chrono fusion strategy. I call it I used to call it the superposition strategy, but me and AI had a long conversation about that. And even technically, it acts like superposition. It's actually a chrono fusion, but we'll talk about that after this.
Of course, we had higher
Talk to us,
U.S.
Sherry.
yields at $100 oil, not to mention that the AI trade remains fragile. Yields at $100 oil, not to mention that the AI trade remains fragile.
And it is that point where we see that reignition of the energy crisis, right? Potentially, what does this mean for global inflation? What does it mean for monetary policy? Does that also start bleeding through to the exuberance that we continue to see in the AI trade? Those Intel numbers providing just the latest catalyst to justify the enormous amount of spending in that space that we continue to see, Sherry.
And all of that spending expected to help some of these companies across Asia, of course, part of that semiconductor supply chain, right? But when it comes to higher oil prices and the ongoing war between Iran and the U.S., we've already seen the results here in Japan as well. The June core CPI coming in at around growth of 1.6% year on year. This is accelerating from the previous month. This a lot to do with just higher oil prices, and it will factor in the BOJ's policy decision, which of course we have next week. Take a look at how markets in Japan are opening, because we continue to watch the Japanese yen very close to that 164 level against the US dollar. We're talking about weakness that we haven't seen since 1986, despite the fact that we continue to get all of this rhetoric from the government and from authorities about potentially having to tamp some of that volatility. You can see the Nikkei now losing more than 1%. The Topix also losing about 1%. We're watching the JGB space very closely as well, because we have seen that sell-off with yields rising higher. The 2-year yield actually at the highest level since the 1990s, given that the BOJ rate hike expectations have been brought forward, given some of the reports that we've seen in the last few days. But at the same time, the Japanese yen really not budging. Take a look at how South Korea is also opening. Of course, we're watching everything to do with tech, right? I mean, we had seen the
not budging, because remember earlier I said it's already priced in. We already knew that.
Asia that could see a boost. The Kospi now losing more than 1.5%, while the Korean won is also seeing some weakness. We had seen a little bit of more of that volatility be reined in the South Korean market this week, at least, with some of that support coming for these suppliers. But in today's session, we're seeing a little bit of pressure with SK Hynix down more than 2%. We have now learned that they're limiting conversions of their Seoul shares into U.S. traded ADR, so 2.5% of outstanding shares. So what that means is that we could see, Heidi, that premium from ADRs over Seoul shares still wide for a while.
It will be very interesting, Sherry, to see how all of this plays into the fact that we are building these expectations for a more hawkish Fed. How does that impact debt levels? How does that impact the debt financing that we've seen with a lot of these foundries, with a lot of these hyperscalers as well, right? So take a look at the broader picture as being reflected in the Treasury market. This, as we continue to see the building of expectations that inflation expectations are going to start getting carried away with oil beyond that $100 a mark level. We're seeing US Treasury yields rising to the year's highs now. The Fed bets really being sparked with what we're seeing in energy prices, the threat of escalation, the seemingly short-term lack of likeliness that we're going to come back to peace talks. And in fact, we just had an earlier report from the New York Times saying that Iraqi-delivered peace proposal has been rejected by Iran, and that the parties are really not much closer on key issues, including what happens with the Strait of Hormuz, at a time we're also seeing other fronts being opened regionally, including the Red Sea, with those Iranian-backed Houthi militants as well. Yield on the shorter end, 2 years climbing to 4.37%. The 10-year benchmark hitting that year-to-date peak around 4.7%. It's been sitting around there for a while. Brent crude at the moment, kind of a lazy start, but it did put on just about 7% in the previous session. Here in Australia, we've got a lag of about 0.5% here for markets coming online this Friday. Let's bring in now for some analysis Jim Liu, who's a co-founder and lead portfolio manager at TenCap. So it feels like the $100 a mark for oil is a bit of a wake-up call for investors. Does it start permeating through to this nice bifurcation where they've gone, we can
She's pretty good from what I remember.
to enjoy the AI rally and not have to worry about the war?
Yeah, look, I think when you're hitting the $100 mark, then the investor does become a little bit concerned how long is that going to last? Because if it does come off quickly, then it's not a real issue. I think what it is that investors now started to think that, okay, well, previously we were pricing in rate rise, and perhaps the rate rise might come a little bit sooner as the inflationary or the oil filters through the economy, and that absolutely caps the valuation for some of the AI, thematic. I think that in terms of the AI investment, the entire thematic is intact. Only thing is the valuation part, for the extremely expensive part of that AI chain is going to be under a little bit more pressure. It is going to have to be led by the earnings itself.
How do you, at this point, with valuations, with the enormous amount of spend and expectations, but not a lot of visibility going into next year and future years in terms of growth and profit and revenue, how do you determine what's good value at this point?
Yeah, absolutely. So I think for the for the hyperscalers and for many other that's at the pointy end of the supply chain, the pointy end of the AI investment, we find it's much harder to call what is the return you're going to get out of it, how much more do you need to spend, and which language model is going to win. I think that's a very, very difficult component of it. And then you have the valuation cap because the rate is going higher. I think what we love to gain exposure to is though because hyperscaler they committed so much money into those data centers, and then there's the company that's supplying those businesses. What we're seeing is that sticks and shovels, absolutely.
That's not that much though.
Their pipelines
overall
is
market
growing, and we know for the next decade the work is just not enough, or is there too much work? We just seen the incredible amount of earnings growth coming out of those businesses, and they are not on very expensive multiples. So for us, this is where the next next generation or next return angle will come from. Then the really pointy end AI business.
We were just talking about your recent time in Shanghai, which sounded lovely. How did it feel on the ground? Because it feels like the economy has kind of at least stabilized. Perhaps there's a lot of excitement that AI gap with the US is being closed now.
Absolutely. So it was quite interesting. I was just in Shanghai, and then there was the AI conference, global AI conference that was taking place. Certainly on the ground, it feels like there's a lot of excitement and the government support, into that whole AI space. And I think the model differential is getting closer and closer to the US leadership. And I think that this is absolutely the focus.
The focus.
Chinese sort of AI supply chain is a very, very interesting diversification for the rest of the world. And that is going to be, I think, lead the price lower for some of the utilization ultimately of those language models.
And that's interesting, right? Because for a long time we'd get bad data print, no reaction in terms of stimulus. Now it feels like the national team is back as well. Clearly the AI space are national champions. Is that a one-way bet for these stocks then?
Yeah, so I think, for these stocks, that's where you want to be focused, where you want to put some of your bets in. And then the next is that the consumer front, clearly that's going to be a more sustainable part of the area. We feel there is green shoot. We feel the consumer is becoming a lot more optimistic. And however, the real data is still yet to come through. We need the real growth, the real.
We feel there's green shoot. I mean, that green shoot's like a industry term. Most people who don't watch this stuff wouldn't catch that normally. Anyways, their conversation's good, but let's wrap this up now. We see where things are going. Here's the futures on the market. It's green. Okay, things are going to rebound probably today in the aftermarket. This trade is probably going to rebound too, I imagine. So we're on a 5-minute chart where each candlestick is 5 minutes. So I'm going to place a trade here, just a small trade, just to let me know where you want to put small trades in, just as a point of reference. So the last time you did the market check was right now with me. So we put in a small trade there. This one right here won't trigger unless it goes up to this point. It's called a buy stop order. The name is kind of counterintuitive. Buy, like B-U-I, and then stop. You're going to buy stop. But basically, a buy stop order, as you can see here, is once the price gets up to that price point, it becomes a buy order, a market order. and then so the price point triggers the order to buy at the next market price, and then it triggers. Usually that doesn't guarantee it'll trigger. Sometimes it goes right through it, and that just means that there was not enough supply to match all the orders, so you just put in another order. But it almost never doesn't order because the currency markets are the largest markets in the world. We're talking 10 trillion daily volume versus all the stock markets are only like 80 billion a day. So there's like it's like an ocean compared to a lake, the currency markets versus the global stock markets. So with that much liquidity and being such a, I'm just a speck of sand in the desert compared to all the traders out there. So me and my clients are gonna get the trade filled almost every time. I gotta say that just to be accurate. And anyway, so I put in a trade here because I'm expecting it in the short term to have this. Expect it to continue. And what we want to watch, this is the risk. You're going to mitigate your risk here by just watching it. You don't want to make a living, guys. Uh, sorry, trying to get this thing to blow up. Okay, guys, you don't want to make a living being glued to the screen every day. That's not what trading's about. And yet that happens to everyone almost, unless you have like an advisor. I mean, at first you're just glued to the screen, but technical trading is only one side of the coin. Fundamental is the other side, and that's why we watch Bloomberg for the fundamental. That's why we read the Wall Street Journal and Zero Hedge and other publications. And then we look to Oanda, just we're using their charting system, but it's also good to have your own independent charting system, like uh, what's it called? Charting Trading View, tradingview.com, tradingview.com. That is a very nice trading platform, and you can connect it. You can connect your Oanda account or any major brokerage account directly into the TradingView platform, so you can trade directly from the platform. It's through what's called an API, and so the API can connect it in there. I should show y'all that. You know what? I will do that. I'm gonna try this evening. I've got a bunch of stuff I'm trying to get straightened out over here, but I've been, and I want to acknowledge that last time, the time before that, and the time before that, I promised. Well, I didn't promise, but I said that I was going to connect the MyFX book website to the Oanda demo account so you can monitor independently all my trades in real time, so you can see that I am legit and not making this up. And then you'll understand why I have this approach, which is very unconventional. But I mean, the kind of person who would figure this out would have to take an unconventional person in the first place to figure something out like this. So eh, I'm not any smarter. So I just work harder, guys. I make up for my lack of ability with discipline and consistent hard work. And so anyone can be successful at this if you just are consistent and have integrity. That's the thing. And remember the number one rule, y'all. The number one rule is to be humble, be consistent, and remember what the third rule is, y'all. Watch my videos, like and subscribe, and share. We're never too busy for referrals. And I'm not pointing at you. I'm just trying to emphasize the point here. All right, y'all. This is the KRISTOPHER signing out for now. I'm excited. I'm going to show off my studio and my trade room. It's here in my home office. I've had it here for almost 20 years now, and I've been remodeling it. So I'm trying to wrap it up. I'm going to give you all a sneak peek, though, tonight. Okay? But for now, bon voyage. And don't forget to like and subscribe And what do you think about the market? What do you think? Do you think that the market's going to break out to the upside? Do you think that a lot of stimulus is still getting sloshed through the system? Do you think this matter is going to get resolved anytime soon with Iran, which is driving the oil prices? And the oil prices, high oils and everything, okay? We know it's the Achilles heel of our entire global economy. So when oil prices go up, it drives up the prices of everything. That causes inflation. Inflation forces the interest rates up. The policymakers have to adjust for that. But the policymakers often are reactive and they're not proactive. That's one thing Trump has been arguing about. The Democrats try to say that he's trying to take away independence from the Federal Reserve chair, but the Federal Reserve has been notoriously wrong and late on doing something about inflation and these problems. And it's like if they were proactive about it, we would have like half as much debt. So I mean, we're talking trillions of dollars we can avoid by just simply being proactive. And so they need to get out of the way, and we need to solve that problem too. But that's another story. Anyways, I want to hear what you have to say. Do you think interest rates are going to go up? Do you think this is going to get resolved? Let me know in the comments. I'd love to hear your feedback. It helps my channel, but also I'd love to engage. And if you're serious about trading and you watch my channel, you're going to learn a lot. And even if you didn't know shit, I make it simple. Buy this. When I say that, that's a signal. But when I say buy, go long Australian dollar, Japanese yen, that's a proxy for the stock market. Okay, that's a proxy for Bitcoin. It's a proxy for China's golden dragon tech sector. Any of the ones, you just buy it. Okay. Now, the signal is to buy. Okay, I gotta be careful because the regulators get on my ass for giving advice like that. And so we have to call it a signal. It's a trade signal, so it's not advice. Okay, even though basically it is. I mean, I don't get it, but we have to call it that. So just be advised, and international risk has additional risk with foreign currency changes and prices and such, geopolitical risk. So make sure that you consult your advisor. We do not offer tax advice, legal advice here at Whitley Financial Strategies. And the KW podcast does not endorse any of the programs that we list. We use them as tools, and we recommend that you conduct your own independent, due diligence on any of this stuff. But anyways, wrap this up, y'all. Thanks again. Thank you so much for your viewership, and like and subscribe. Don't forget to share. KW signing out. And watch for my video, y'all. It's coming out tonight. You're gonna be excited, and then I'll get you the MyFX book too. The end. Signing out.